Good evening, everyone. Time for another silver update. This is the chart of Apple computer overlaid with the chart of silver as provided by netdania.com. You can click on the link below. This chart starts roughly in the summer of 2006, and it goes through the period of the financial crisis, which you can see with the silver price topped out with the Bear Stearns situation, and then it went down with the financial crisis. When you look back on things, almost kind of a flatline area. Doesn't really seem to be a big impact in the financial crisis, but at the time it was a tremendous drop from $21 down to $8.50. But you can see in the scheme of things now, as we begin to go up, that silver, although it was described as being in a bubble, and I'm going to get into that in a second, back in May, where it was almost at $50, and then it really took a big hit and has been recovering ever since. Apple Computer really didn't correct at all, and then it continued to rally, and then it just exploded into kind of this parabolic move. So you have about an 8 to 850% return on Apple Computer from about 2006, late 2006. And with silver, you've got about 175% return or so. So just on those figures alone, one would have to say that silver is in a healthy correction. It did not correct back down to this line, which was the 21 top. It did correct back down to 26, which is very close to that. You can see that Apple Computer corrected back down to this level here, but since then it has not had any significant corrections, and now it seems to be on a parabolic spike. So the question is Apple Computer in a bubble? I think it is, and I'm going to go and look at my Office series describing bubbles and do some comparisons. But one of the criticisms a lot of people make about investing in the precious metals, in fact, probably the major criticism that people make about investing in precious metals, is that they don't have any return. In other words, there's no interest or dividend paid on those. Now, to this day, Apple Computer does not pay a dividend. I find that highly suspicious. Now, of course, our financial system has been completely corrupted from the earlier days where ownership in shares of a company entitled you to the profits of that company. Most of the companies now in the world that are on the stock exchanges aren't interested in sharing their profits with their shareholders. They're interested in having the insiders siphon off their profits to enrich themselves. So that has changed. And because of that, as far as that criticism goes, there's no difference at all between Apple Computer and gold and silver, because neither of them pay any kind of dividend or interest. It's all just a speculative bet about how high the price is going to rise and how much of a capital gain you're going to make on it. Now, I know that Apple has announced that at some point they're going to be paying a dividend, but if you look at the dividend on most of the stocks out on the stock exchange, they're a ridiculous 1% and 2%, and just not any kind of real yield. Just today, the Brazilian government announced that they're lowering interest rates to 9%. So there's an example of a yield, a 9% yield. Most of the dividends on the stock exchange pay less than 2% and even less than 1% for most of them. So let's go over to the Office series, and I wanted to examine the aspects of a bubble, and I'll link this. This is Silver Bubble Debunked, Office Series 2, or Part 1, and it is going into the definition taken from Wikipedia of what is a financial bubble. So let's look at some of these and talk about Apple and silver. First of all, it's a popular mania. That's one of the key traits of a bubble. Now, I don't think there's any doubt that Apple and the things that Apple make, I'm not going to criticize the quality of them. I have an Apple. I'm not particularly enthused with it. I have an iMac, and as a person who's in the business of networking and computing, uh, for me, the Apple is just kind of a dummy's device. It's a dumbed down computer for the person who doesn't really understand computers. So for me, it's a lot more of a bother than a help, because it's just not. I would never purchase another Apple computer. That's just a personal preference. But there's a lot of other things that Apple makes. There's the iPod and there's the iPhone, and a lot of these things are very, very popular. But they do seem to have a popular mania about them. In other words, they're kind of trendy, it's cool, and that's so. Apple definitely shares that popular mania. Silver, on the other hand, is the polar opposite. Silver is not a popular mania in any sense of the word. It is probably the most underloved and most hated investment out there. Excessive debt, that's one of the keys to a bubble. Now, excessive debt in the stock market is not so much the case because there are margin requirements. But then again, if you're talking about the excessive debt, as I pointed out, the excessive debt that's been created by the Federal Reserve and the Treasury and the government, trillions and trillions of dollars, and I think a lot of that money has flowed into Apple. So I would bet that there is excessive debt in that. How much of that money has flowed into silver? Well, I don't think hardly any of it has flowed into silver, just because if you look at the amount of silver that's out there, it's so tiny. Even the paper silver is so tiny relative to other financial assets. I think the statistic is now that the precious metals represent 1 to 2% of financial assets, whereas on a historical basis they normally represent 20%. So there's probably excessive debt in Apple, and there is certainly no excessive debt in silver. Greater fool theory, well, I just covered that. Any asset that doesn't pay a dividend, of course, it's going to have to be, you're going to try to sell it to a greater fool. When do you actually take delivery in your ownership of Apple? Well, you don't. So, in essence, you're just trying to sell it to somebody else who thinks it's worth more. With silver, are you trying to sell it to a greater fool? I don't think so. I think that you're actually investing because you think it has intrinsic value, and you're actually expecting to sell it to a person who in the future actually recognizes its true worth, so you're not really looking to dump something. So different on that one as well. High volumes at variance with intrinsic values. There's no question that Apple Computer is at very, very high volumes. When you're looking at the market cap, you're looking at the percent in the NASDAQ. Zero Hedge has done a number of articles on the incredible amount of money that Apple represents in the NASDAQ, and all the money, the market cap is at about $5 billion and trades an enormous amount every single day. Is it not in line with intrinsic values? Well, I can't say for sure. Apple Computer could maybe be the most popular thing in China and India and grow another fivefold from here in sales. That's possible. I think it's highly unlikely. So probably it's out of line with intrinsic values. Silver, no, silver is the exact opposite. It's way out of line with intrinsic values. It's extremely undervalued as not only as an industrial metal because it's in so much demand and becoming so rare, the stockpiles are dwindling, but it's also as a monetary metal, it's way out of whack. The normal ratio to gold should be 16 or 10 to 1. So we're way out of line on the low side on intrinsic value. Does it cause a misallocation of resources? Well, that's hard to apply there. I would say that the amount of people participating in this Apple bubble is getting to the point where it's ridiculous. Of course, the amount of people participating in silver is very, very tiny, and it's not causing any new silver mines to be opened up. So that's kind of a wash. And then the last one is, does it cause people to spend more because they feel richer? I suppose that there are a number of Apple millionaires, multimillionaires out there that are probably spending more because they're feeling richer with their Apple stock. So that could be the case. Certainly, that's not the case with silver. Number one, because no one really owns it, and number two, because as I showed on the chart, its appreciation is fairly steady, not extreme. It's just been a steady gain over the last decade or so. So I don't think you have a lot of silver gazillionaires out there running around spending money because they feel rich. So by all those measurements, I think that Apple meets most of them as far as being a bubble. Silver certainly meets none of them. And we'll wait and see. I'm going to watch this chart very carefully because I think it has gone parabolic and it's going to crash. And I would really like to see how the NASDAQ, the rest of the market reacts when that does happen. On to the viewer question of the night, and that is from Lone Skater 52. If I have time, I'll take a few of these because I need to catch up. And he says, "Hey, brother Jay, I have a question about the ability of stacking silver now to propel somebody up the social ladder into a higher class. I'm a 24-year-old recent college graduate, finance degree. I have no student debt and very little credit card debt. I have been out of college for 1.5 years and have amassed a small stack of about 300 ounces. That's a lot for me. I don't make much. Total, my family and I have about 1,000 ounces. My family and I have been firmly in the lower middle class of all my life, enough to get by but never a vacation or too many luxuries. My question is, what kind of power in a post-dollar world will silver have to send people up into another class? With our small stack, we'll be able to transition in the middle class or even the upper middle class. When people lose everything, retirement accounts, savings, cash, and we still have our silver, what kind of wealth position will we be in? So that's a tough question to answer. I think the famous quote by Mark Twain was that I'm much more concerned with the return of my money than the return on my money. And so that's going to be the primary reason for stacking silver. It's a way of protecting your savings from what's coming. Could it make you wealthy? Yes, it very well could. It could be that if everything turns out correctly for silver, where you have some kind of return to a precious metals standard, and you also have continued runaway growth in the eastern part of the world and a technological boom over there, then you could have tremendous demand for silver as an industrial commodity, combined with Chinese encouragement for the remonetization of silver. If you had those two combined, then yes, you probably could see silver stackers be propelled into being the next wealthy class, and that wouldn't at all surprise me. So let's take another question. This one is about the Federal Reserve, and this is from Celine42. Hey, Brother John, I had a debate with some friends the other day which left me asking myself some questions. I'm hoping you can clear a few of these up for me. We were speaking about the Federal Reserve, and I pointed out it's a private entity. It's not part of our government. I brought up that it is owned by private individuals and is for profit. They asked me who owns it. They said what I'm saying is a conspiracy, and there's no proof to back up my claim. Can you tell me who owns the Fed? What and how does the Fed benefit if the U.S. dollar economy collapses? Why doesn't the U.S. government print its own money? Why do we need to borrow? What dollar or currency are we borrowing if the dollars don't exist? My friend later emailed me what is posted on the Federal Reserve website, which I have pasted down below. Who owns the Federal Reserve? The Federal Reserve System fulfills its public mission as an independent entity within government. It is not owned by anyone and is not a private profit-making institution. And so I'm going to stop there. That, if you parse that correctly, it would probably take an army of lawyers to parse that sentence. That's like Bill Clinton testifying about what the meaning of is. So they say the Federal Reserve System fulfills its public mission as an independent entity within government. What does that mean? That's nonsense. It is not owned by anyone and is not a private profit-making institution. So being private would indicate that it's a profit-making institution. I would have to say that weighed in the balance, this statement pretty much would have to be considered a lie. Now, I can't go into G. Edward Griffin and the Creature from Jekyll Island and all that stuff, so I'll just take you to a simple section on Wikipedia. So most of your people who accuse you of being a tinfoil hat wearing nutcase will generally accept the statements about the Federal Reserve System in Wikipedia. So one of the ways you can check on whether this stuff is true, of course, is how the courts have determined whether the Federal Reserve is actually private or public. And this is the statement that is in Wikipedia, so you can come to your own conclusion on this. It says, I just lost it there. Sorry, I was trying to make it larger. The Federal Reserve banks have an intermediate legal status. Now, that has got to be gobbledygook written by lawyers. So that's going to send up a lot of red flags. The second that you see a sentence like that, generally you're going to have to conclude that you're dealing with some really suspicious and shady characters here. If we're talking and saying that they have an intermediate legal status, I don't even know what that means. With some features of private corporations and some features of public federal agencies. The United States has an interest in the Federal Reserve Bank as tax-exempt federal created instrumentalities whose profits belong to the federal government, but this interest is not proprietary. Okay, go ahead and hire a lawyer to parse that. In Lewis versus the United States Court of Appeals for the Ninth Circuit stated, quote, "The Federal Reserve banks are not federal instrumentalities for the purpose of the FTCA, the Federal Tort Claims Act, but are independent, privately owned, and locally controlled corporations." So that is a statement from the Ninth Circuit Court of Appeals of the United States. The opinion went on to say, however, that the reserve banks have properly been held to be federal instrumentalities for some purposes. Another relevant decision is Scott versus Federal Reserve Bank of Kansas City, in which the distinction is made between Federal Reserve banks, which are federally created instrumentalities, and the Board of Governors, which is a federal agency. So the answer to the question is going to be one gigantic maybe, but you have to conclude just by looking at the confusing, and you have to remember, if you're dealing with confusion, you're dealing with evil, because that's the nature of evil. Evil, that's a biblical principle, some might say, that evil hides itself behind confusion. Well, the truth, normally when you recognize a truth, you have the light bulb effect. A light bulb goes on in your mind and you recognize, oh wow, that's I never understood that. Now I understand that. That's the way that truth operates. Evil and lies, on the other hand, operate through confusion and obfuscation. So there's no doubt that the Federal Reserve Bank, whatever its legal status is a very fishy and questionable and potentially evil institution that couches itself in public, semi-public, semi-private, and private terms, and it's very difficult for anybody to get a handle on it. So you can draw your own conclusions from that. Back to the chart, silver is clearly correcting from a overbought situation, certainly not a bubble. Apple, on the other hand, is a bubble. So we're going to see silver in the future as people begin to recognize that silver doesn't have any aspects of being a bubble. Well, a lot of stocks are truly just a lot of people trying to sell to the next sucker. But silver is a true value and is undervalued at this time, and that's why you want to stack it. And we'll talk to you next time.